Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO Founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul continues his conversation with Alan Scharfstein, CEO of middle market investment banking firm the DAK Group, focusing on the when, why, and how of selling your business.
I guess moving to a slightly different topic, and this becomes more of the strategy and the mechanics of these kind of processes for a company that's looking to sell. I mean, again, you say your phrase is run your business like you will own it forever and prepare to sell tomorrow, which I think is brilliantly put. It's exactly right. In terms of timing, and this will lead to sort of a more mechanical question, but in terms of timing, it's there are so many factors that go into that for a company, particularly for a private owner, in terms of, is now the right time? I mean, there are personal things that go into that. There's expectations of growth or fear of, losing everything. I mean, can you just walk us through, in terms of your experience, because you've done a lot of these, what are typically the considerations in terms of looking for an exit strategy and the timing thereof?
Paul, I think you hit it right when you said there are a lot of factors that go into it, and it varies by individual and by situation. There is a combination of both the personal, is it the right time for the individual to be doing this? It's the question, is it the right time in the economy? Are we selling into the right market? And is it the right time for the business? How is the business performing? And what is the right timing? If you can get those things to all align for you, right time personally, right time for business, right economy, that's an easy one. The challenge is always what happens when only one or two out of those three align. So I think what we're really looking at is we're really looking to find situations where it is the right time for an owner personally, but where some of the other factors align also in terms of being the right time to sell a business and having prepared properly for that sale. What we see is that most owners do not address exit strategy in a logical type of fashion. Most, when you talk to many business owners and you say, when are you going to exit your business? Some will say, when I hit the age of 55, when I hit the age of 60. That's like looking at a stock that you own in a publicly traded market and say, when am I going to sell this stock? And someone says, I'll sell it when I hit 55. Really, you want to sell that stock when it hits its maximum value. And that's what most owners do not do. And there are a lot of reasons for this. When you look at the surveys as to why business owners do that, many see even the discussion of an exit strategy as a sign of weakness or a sign of fear. So many don't even engage in that discussion. And even more so, most business owners don't even know how to approach the sale of their business. They don't know who to hire. If you have a legal issue, you pretty much know that you should hire a lawyer. If you have an accounting issue, odds are you have a CPA firm. When it comes to the sale of a business or the thought of the strategy for the sale of business, who do you turn to as a business owner? And how do you find a firm that understands your market, understands businesses your size, and is willing to give you good strategic advice on not only how to prepare for that sale, but when to pull the trigger on it? And again, all the surveys show that most business owners are very much adrift when it comes to trying to find the right advice and the right guidance in this area.
Once that process is engaged, there's also the question of how to do it. And again, that goes to what you're talking about, finding the right advisors, and really what your objectives are, because there's also this misperception, I think, that it's a question of all or nothing. I got to sell and then I'm going to go play golf, which is not necessarily the case. In fact, it certainly doesn't need to be the case in many cases, right? Because you do have things like recaps where you can take some money off the table so thereby providing for your personal financial security or your family's financial security, but still be in the game, which raises a whole other level of both complexity and a whole bunch of other decisions to be made, because now for a lot of these guys, for the first time, they've got a partner, and a partner who will have some significant leverage over them, a private equity firm, for instance. I've spoken to several folks who've done that, and it's great. They've secured their financial future, but they're still in the game. But the game changes, right? Because you're not the sole arbiter of your company's future anymore. You actually have partners, and sometimes that's a tough transition. I mean, do you see that a lot?
One of the biggest biggest fears that business owners have is what's going to happen post-transaction. But one thing I will tell you that happens is very, very few business owners retire and spend the rest of their lives on a golf course. It does happen, but most business owners are driven, are challenged, want to be challenged, and therefore want something meaningful to do post-transaction. So for some of them, and for more and more of them, you're right. Today that means not necessarily selling out the whole business, selling part of it, taking some money off the table, mitigating some risk, and hedging their bets. And yes, that means sometimes taking on a partner and dealing with the issues that having a partner reflects. Now, part of the challenge of doing this, if you're going to look for a recap or for a partial sale, is to choose the right partner. One of the big mistakes that business owners make is they look at the dollars and the dollars only. The dollars are obviously a critical factor, but those business owners who are happiest after a deal is done are the ones who have spent the right amount of time vetting and researching and understanding who their partners might be. Every business partner, every private equity firm has its own DNA. They have a reputation. It's easy to diligence them. It's easy to understand the way they operate and how they treat owners and what happens if there's a bump in the road and whether they make their lives easier or harder post-transaction. If a business owner is going to do his diligence properly, then that becomes a critical factor here. The challenge that we see with many business owners is many business owners think that when they sell their business, this is a process where the buyer, has the right to ask all the questions and do all the diligence on the company they're acquiring, and the seller is simply responding to the inquisition. Right. Those deals that work best are those where there's a real dialogue going on there, and where diligence is a two-way street. And really you make the decision both on the terms of dollars and fit. And if you do that properly, you do your homework properly, you stand a pretty good chance of having a partner that you're going to feel very comfortable with after a deal is done. I
was wondering if you could give us a little bit of a thumbnail sketch of, kind of what the trends are that you're seeing in the M&A world for middle market companies. Sort of the latest thing from the battlefield, as it were.
The M&A market remains very hot, very active, with both strategic and financial players playing really meaningful roles in it. Additionally, the foreign purchasers and foreign investors in the U.S. market, again, remain very active as we see it. From the sell side, where we think that 2015 will turn out to be a record year in the middle market, but we're also seeing very, very substantial growth in pipeline for the 2016 transactions. Most of that growth is being driven by business owners' concerns as to how long this very strong market will continue. The market is frothy right now, but what we're seeing is business owners who are looking at exit strategies over the next 24 to 36 months, believing that the time to act will be in 2016. So we think that 2016 is going to become a very, very strong year for business sales to both strategic and financial buyers.
And if I could just follow up real quickly on that, I mean, there's been a lot of talk about private equity funds having to exit, because their windows are almost up, the 5 to 7 year window, which may or may not be relevant anymore, but that's how it used to be anyway. And there's been a lot of talk about that there's going to be a lot of private equity funds who are going to be interested in doing deals with their portfolio companies. Have you seen much of that?
Yes, we see private equity firms very active on the sell side right now. We think private equity firms are looking at the values that are out there. They realize that those values have grown significantly, and again, they're looking to exit while the timing is good. So we see a number of private equity firms looking to sell their portfolio companies at the current relatively high levels of valuation.
Be sure to check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.